It's time now to take a look at the global market action this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Thanks for coming on this afternoon.
Thank you for having me.
Well, let's start with the global markets. Wall Street was closed for Memorial Day, of course, but European stocks were up. Was it the EU elections driving that?
Yes, the European shares climbed on Monday as the EU Parliament election showed that European parties are still performing reasonably well despite the rise in the supporter of the nationalists. Pro-EU parties are still expected to make up the majority of the parliament. That's the main reason why the European market kind of recovered. Along with that, we've seen the Korean market as well as the Chinese market recovering nicely today because of the additional boosting measure that might be coming from China. Also, the currencies are stabilizing at this point in time. So the KOSPI was up close to 0.4%. China is up close to 1%.
Well, speaking of China, today, Tuesday, MSCI is going to be rebalancing its emerging markets index. People are saying this will be a major adjustment. Definitely something to watch for investors in that sector. Korea is one of these emerging markets. Tell us a bit more about what this index is.
Yes, the MSCI Emerging Market Index stands for the Morgan Stanley Capital International and is an index used to measure the equity market performance in the global emerging markets. Now, the MSCI Emerging Market Index captures large and mid-cap representation across 24 emerging market countries. With 1,138 constituents, the index covers approximately 85% of the free float adjusted market capitalization of each country. Now, due to the inherent political and monetary risk, emerging markets are considered to be a risky investment. And if you look at the total size of the funds, it is only about 20% of the overall global equity funds. So, of course, it's a much smaller portion. But nevertheless, depending on the weighting of each countries, the foreign investors' movements are determined accordingly.
So next month, the FTSE Russell is adding more mainland Chinese stocks that trade in RMB, the so-called A shares. MSCI is adding more of those too. What effect might more Chinese mainland shares have on Korea?
Sure. Clearly, global index provider MSCI will be quadrupling the weighting of Chinese mainland shares, the A shares, in its global benchmark later this year, since they've decided on February of this year. The move could potentially draw more than 80 billion of fresh foreign inflows to the second biggest economy of China, quite sizable amount. Now, in terms of the percentage-wise, the large cap stocks will be moving up from 5% to 20% in 3 steps in May, in August, and November of this year. So the overall MSCI Emerging Market Index weighting of Chinese stocks will be moving from 0.7% currently to 3.3%. It's a quite significant change. Obviously, this will be having some negative impact on Korea, as the Korea still have not entered the developed market status of MSCI index. Therefore, any increase in China shares will have some negative impact on Korean equity market. We're not really sure how much money will be outflowing from Korea to go into China, but the Korea's weighting might be going down as much as 0.48 percentage point, which could amount to about $4 billion of the total outflow from Korea.
All right, got it. Mr. Yu, very informative discussion today. Thanks so much for your insights.
Thank you very much for the call.